for business. Let's now cross over to Studio B, where Alfredo Kanse is standing by.
All right, thank you very much, Portia. Then, as getting to the world of business this evening, started with the Ghana Stock Exchange because the absence of block trade on the exchange resulted in a considerable drop in aggregate volume and value of shares traded on the Ghana Stock Exchange. Market capitalization dropped further, settling at 54 billion cedis.
A total of 997,112 shares exchanged hands and was valued at 488,164, a decline of 62.66% in volume and 92% in value compared to the previous week. Market activities were largely skewed towards the financial stocks. Ecobank Transnational Incorporated recorded the highest activity last week, with a contribution representing 79.45% of total traded shares. UT Bank led gainers, appreciating by 11.11% in value, and Enterprise Group Limited 0.41%.
It's quite good that we are seeing some price appreciations in the UT stock. It's come down very significantly from even its IPO price, and we all know that some of the issues that UT went through. I think this is a vote of confidence that investors are showing in their new management. The hope is that this will be able to turn around the bank, and shareholders will begin to find some very good value in the bank.
Activities on the bourse ended in favor of the bears following the increased pressure in the market. Total lost minus 12.24% in value. ETI minus 5.56%. PZ Cousins minus 3.70%. Benzo Oil Palm Plantation minus 1.61%. And Societe Generale minus 1.30%.
The Chief Executive Officer of Africa Energy Consortium, Kwame Jantuah, says the Tema Oil Refinery should prioritize maintaining and sustaining its operations at the downstream petroleum sector. He is confident the energy sector levies will help the refinery restructure its debt into a 10-year bond.
According to the Chief Executive Officer of African Energy Consortium, Kwame Jantuah, the new profitable Tema Oil Refinery could leverage the energy sector levies in restructuring its debts.
The management of TOR are looking to change its debts that have accumulated in the past, into a bond form. They will use the levies to also help pay for the interest. It's not only the institutions, it's the people of Ghana also who have done a yeoman's job in the levies and taxes that they've paid all this while to make sure that TOR doesn't go bust.
The energy expert is of the view restructuring all the refinery should factor in maintaining its operations.
We don't have a midstream in Ghana yet to come on board, but where the upstream and the downstream can link up would be fantastic, and that can only happen when we have more fields producing oil and gas, so that we can have a bumper. We can also export and also supply TOR crude for them to also refine for Ghanaians to use.
Kwame Jantuah cautioned any unnecessary interference may send the refinery back to its non-operational era.
I hope TOR can maintain where they are now, and even if they don't run a profit, at least they'll break even and they would not go back to where they came from.
TOR is equipped to process 45,000 barrels of crude oil per stream day and is currently processing under a tolling arrangement with Boast.
Tullow Oil has assured its shareholders of long-term returns following the company's restructuring measures at the Tullow Oil Investor Forum in Accra. The management said the restructuring will enable the company attain maximum efficiency.
Tullow Oil is a leading independent oil and gas exploration and production company. In October 2008, it was appointed as the first field operator and brought Ghana its first major oil production. It also developed the 10 project, which is set to provide the first oil on track for July and August of this year. Once both fields are on plateau production, the net average production from Ghana will be over 70,000 barrels per day. Presently, Tullow Oil seeks to adopt a simpler and more cost-effective operation strategy appropriate for the development of the company's corporate goals. At an investor forum held by Tullow Oil, Group CEO Aidan Havey noted the restructuring would not negatively affect its shareholders, but would rather position them to retrieve dividends in the long term.
We spent all of 2015 looking at every aspect of the business. We looked at the numbers of people that we had employed. We looked at the way that we do business, our systems, how we explored, and tried to make ourselves as efficient as possible.
The management of Tullow Oil further noted the company's priority is to remain stable despite fluctuations in oil prices globally.
And 14, we felt that the oil price might stabilise at around $75. By the time we went into 2015, we felt it probably would stabilise around $50. As Ike was saying there, we decided to move very quickly and reset the business. Now, what we mean by resetting the business is basically to get the cost structure of the business down to a business that would make money at $50 oil.
Tullow Oil continually reviews its asset portfolio and considers monetizing assets in order to fund future activities and generate returns for its investors. Its business model is underpinned by a prudent financial strategy and diverse sources of debt and funding.